Good evening. Today, we're diving into a concept that is absolutely defining the financial world right now. It's called the iceberg market. What we're seeing on the surface is just blindingly positive, right? But what lies beneath all that is a complex, unprecedented, and honestly, a potentially dangerous reality. Today, we're going to explore the central mystery of the 2026 financial markets, stripping away all the noise to look at the hard data, the hidden strategies, and the real numbers that are driving the global economy. I want to start with a single question, and I really want you to think about this seriously. Who is actually in control of the global stock market right now? You might assume it's the Federal Reserve setting interest rates. Not quite. Not massive corporate earnings either. Not even global oil prices, though those matter enormously right now. According to a new analysis from Fundstrat Research, the single biggest driver of the 5 best and 5 worst days in the S&P 500 over the last 15 months has been one person. One man's words, specifically President Donald Trump's social media posts. The sheer volume of wealth that shifts based on a single announcement on Truth Social is literally something we have never seen before in modern financial history. Okay, let's dive into this by looking at the surface-level reality we are dealing with. First, the facts. As of this week, the S&P 500 closed at a record high of 7,398. The Nasdaq Composite also reached record levels, surging right alongside major tech stocks. We just saw an April jobs report where the U.S. economy added 115,000 jobs. That is nearly double the forecast. And corporate earnings, especially in the AI sector, have been nothing short of exceptional. When you hear numbers like this, you naturally picture a thriving, historic bull market. But we really need to look deeper. There's a striking juxtaposition defining 2026. On the surface, you have these incredibly bullish indicators, record highs, and AMD crossing a $713 billion market cap. But underneath, the macro cracks are widening. Oil is sitting above $96 a barrel because of a real ongoing war in the Middle East. Inflation is expected to tick back up to 3.7%, and the Federal Reserve has completely stalled on rate cuts. In fact, futures traders are now pricing in a possible rate hike. Experienced market analysts are looking at this exact contrast and concluding that the market is basically running on hope. The foundation is strong in some places, sure, but those underlying macro cracks are definitely widening. Section 1. The taco trade. Wall Street's most viral 2026 strategy. Now let me explain something that has become one of the most discussed strategies on Wall Street this year. The sheer audacity of it is just fascinating. It's universally referred to on trading desks as the taco trade. And yes, that's an acronym. It stands for Trump always chickens out. Traders have essentially identified a highly predictable pattern in the current administration's geopolitical chaos, and they're using it as a reliable, highly profitable mechanism. Here is exactly how this trader playbook works, step by step. First, an aggressive policy or a military threat is announced by the president. Second, markets drop sharply as anxiety spikes. Now, traditionally, this is where investors panic. But taco traders, they do the exact opposite. They buy the dip. Why? Because step 3 is the administration walking it back, de-escalating, and offering an off-ramp. And finally, step 4, the markets sharply recover, and the traders who position themselves during the panic make an absolute fortune. We saw this exact sequence play out perfectly in early April. The president suspended airstrikes on Iran, and the resulting de-escalation triggered a massive 1,325-point surge in the Dow in a single session. And look, this isn't just some fringe theory. Listen to what Adam Kobesi of the Kobesi Letter had to say about it. He described this environment as, quote, the most profitable market conditions in history for systematic traders. So volatility itself has literally become the product. But here is the concern. There is an inherent danger here. Markets that become conditioned to completely ignore risk, banking on a guaranteed de-escalation, eventually face catastrophic reversals. If the taco trade fails even once, the downside is going to be severe. Section 2. Unusual volume. The 6:50 a.m. anomaly. There is a story developing around financial markets right now that deserves far more scrutiny. In March of this year, a highly unusual chronological timeline unfolded. At exactly 6:50 a.m., massive volume spikes were recorded in both S&P 500 and oil futures. Keep in mind, this is happening at a time of day when liquidity is notoriously thin and trading is dead quiet. Exactly 15 minutes later, at 7:05 a.m., President Trump posted a major market-moving announcement on Truth Social. After that 7:05 a.m. post, those anonymous traders who positioned themselves beforehand walked away with significant fortunes. Both the SEC and the CME Group have completely declined to comment on this phenomenon. And these anomalies extend deeply into the prediction markets too. The Department of Justice recently indicted a U.S. Special Forces soldier for allegedly using classified government information to place bets on Polymarket regarding a U.S. raid on Venezuelan President Maduro. He pocketed over $400,000. On top of that, an anonymous trader achieved a statistically near impossible 93% win rate on Polymarket, betting on Iran war outcomes, netting nearly $1 million. Analysts are widely calling this a strong signal of insider activity. It's also a matter of public record that the president's son, Donald Trump Jr., actually sits on Polymarket's advisory board, and his venture capital firm is an investor in the platform. These are just the facts that are currently unnerving the financial community. Section 3. The Crypto Pivot. Politics meets protocol. To really grasp the scale of this whole narrative, you just have to listen to what the family is saying publicly. At the Consensus 2026 conference in Miami, Eric Trump took the stage and delivered this quote. Every single day, you see Merrill Lynch, you see Schwab, you see JP Morgan. Now they are allowing people to take out home mortgages against their Bitcoin holdings. It's a remarkably bullish public narrative designed to show that traditional finance has completely capitulated to crypto adoption. In fact, Eric Trump has publicly predicted that Bitcoin will eventually hit an absolutely massive valuation, $1 million per coin. The administration is really pushing this vision of boundless upside. And the family isn't just talking about it, they are participating directly in this ecosystem. The Trump meme coin reached a staggering $12 billion market cap. Melania Trump has launched her own independent cryptocurrency. The United States has officially become the most crypto-friendly administration in history. And because of this deep alignment, Bitcoin now moves directly in tandem with the president's actions. During the April Iran peace talks, Bitcoin jumped 5.2% in just 10 minutes, based purely on shifting geopolitical winds. We are talking about billions of dollars in value moving on the back of Truth's social posts. Section 4. Math versus marketing. The $82 million disconnect. Now here is where things get really interesting. The Trump family co-founded a publicly traded Nasdaq company called American Bitcoin, or ABTC. And in Q1 of 2026, they had a phenomenal operational quarter. They mined exactly 817 Bitcoin, setting a brand new record for the company's production, all while Bitcoin was trading above $80,000. And this brilliantly illustrates the massive disconnect we're talking about. Despite mining record amounts of Bitcoin in a supposedly booming market, American Bitcoin reported a net loss of $82 million for that exact same quarter. Wait, how is that even possible? Well, it's because Bitcoin's price dropped 22% over that quarter. Under strict mark-to-market accounting rules, the company had to realize those massive losses right on their balance sheet. Their stock dropped 12% after the earnings call. The math simply defeated the marketing. When you compare their strategy to the rest of the market, the problem becomes even clearer. While American Bitcoin remains 100% focused purely on Bitcoin mining and, frankly, burning cash, the broader mining industry saw the writing on the wall. The smartest companies out there have aggressively pivoted their infrastructure to high-performance computing. They've collectively signed over $70 billion in lucrative AI contracts. A political brand can definitely get you regulatory goodwill, but it absolutely cannot change the fundamental economics of the sector. Now, to be completely fair and objective here, there is a genuine operational bright spot for them. American Bitcoin successfully lowered their mining cost per coin from $46,900 down to $36,200. That is a highly impressive 23% improvement in operational efficiency. But ultimately, operational efficiency alone just cannot overcome tens of millions in accounting losses when you are solely reliant on the volatile price of a single asset. Section 5. The big picture, the 3 fragile pillars of 2026. So let's zoom out. As we stand right now, this record high market is not being supported by broad economic stability. It's actually being propped up by 3 incredibly fragile pillars. First, you have massive corporate earnings driven almost entirely by the AI boom. Second, the incredibly fragile hopes for de-escalation and peace in the Middle East, which is keeping oil from skyrocketing further. And third, the president's next social media post. That's the reality we're in. The entire market is balancing on these 3 factors, and every single one of them has the potential to completely reverse direction in a matter of 15 minutes. Which leaves us with the most important question of all today. How are you positioning yourself given these totally unprecedented variables? We are living through a financial era where the traditional rules of the Federal Reserve are being completely overshadowed by 7 a.m. posts and viral trading strategies. Understanding these mechanics is really the only way to navigate what's coming. Think deeply about how your portfolio responds to sudden geopolitical shifts. And hey, if you found this breakdown valuable, make sure to subscribe so you don't miss next week's Explainer, where we'll dive into the new CPI inflation data and what the upcoming China meeting means for your investments. Keep learning, stay focused, and I'll see you in the next one.